Hello, and welcome to our latest Money Show Money Masters podcast segment. I'm Mike Larson, editor-in-chief at MoneyShow, and today we're doubling up with a pair of private and public market investing experts in the technology sector. They're Howard Tolman, general managing partner at G2T3V, and Keith Fitz-Gerald, principal at the Fitz-Gerald Group. Gentlemen, welcome to the podcast.
Thanks for having me.
I'll tell you, we had a great discussion going before we even came on camera here, and I guess that's where I'm going to kick it off. I mean, in the technology arena, a lot of exciting stuff going on out there in terms of the underlying technology, and of course, from a public market standpoint, a little bit of a stumble here as we start Q2 in that sector, and even some of the Mag 7 names have had trouble all year. So I don't know who wants to take it first. Where do you think we are in this technology cycle? Again, both in a public and private market perspective.
Well, I'd like to go back, just to where we were when we started, because one of the things Howard and I were talking about, Mike, before we, kicked on here was this legacy of tech. People think that it's all about today, but Howard and I have been around a long time. We've been doing this a long time, and we're talking about some of the things in the trenches, adventures at Microsoft and Intel. I mean, Howard, what do you think?
Well, what I was going to say, because what we were talking about is feature integration. And what I am so concerned about, because we're a venture fund as well, and so we look at these startups, and I say to them, your entire life is dependent on either we will fold you in or we will crush you. And we've got 4 or 5 platforms, and they're just out there, and it's like a candy store. And you look at Facebook, and you look at Amazon, and you look at Microsoft. So, for years, I mean, the FTC, we finally have a sort of an activist FTC, but I mean, they've looked at this issue of innovation being crushed by the big guys. And, I think we're in for 2 years, at least, or a year of, more regulatory headaches for the big guys. And maybe they just sort of flick it off because it's legal expense, and they figure they'll spend $1 billion on lawyers and they won't even flinch. But I think that when you talk about the big 7, I think that Facebook and Google have some real exposure between privacy and between all of these other kinds of issues. I feel like Amazon, it would be the greatest favor in the world if they would force Amazon to spin off AWS. I would then have $2 trillion, companies instead of one. I mean, and well, they don't even understand that AWS runs the government, runs the back end of the government.
I know it. I mean, these are the same folks who couldn't understand, how to balance a checkbook as we came into the credit default swap mess. So, I share your perspective. I think Google has got some serious regulatory issues. I think that the recent memo from their search thing, hey, you guys got to work faster, is an attention getter for any slacker who thinks they're going to get perks all day. You better get serious, because Google's going to have to compete. I worry that it's too little too late. I think Amazon's got some regulatory challenge. Certainly the FTC's ire is building against them. I know a lot of consumers are frustrated with the fact that, once again, their data is being used in ways that they didn't sign up for. So they're being productized without their knowledge or explicit consent. But I do also think that it's going to prompt some unexpected consequences, Mike, to your question. I think we're going to see offshore markets blossom because companies like Apple and Google and Microsoft and Meta are going to figure out ways to go to more business-friendly environments. They won't take all of their operations out there, but to Howard's point, they're certainly going to adapt.
Yeah, and I think I think when you talk about AI, and I mean, that's obviously a whole conversation, but I have a fantasy, because I've run call centers for years, and the shame of exporting a call center to India or wherever has to do with language. And today we have tools. There's just no question in my mind that somebody sitting in India who's a decent typist could respond to a conversation in real time in the voice of somebody from southern Omaha, Nebraska, and you wouldn't be able to tell for 1 second that wasn't somebody who was around the corner from you, as opposed to halfway across the world. So voice is going to, and basically even video, assistants are going to change the way that we interact with, this new digital world. There's a quote that I saw recently that, how crazy and ironic is it that the computer now asks us to prove that we're humans.
Isn't that guy?
Yeah.
The one that gets me is I'm sitting here working all day on whatever it is. I mean, we have multiple platforms in our office, just like you do. And, all of a sudden one will say, hey, are you human? You better verify your credentials. And the other is going to ask, oh, well, you got to do X, Y, and Z. It's like, I've been working on both of you ding-a-ling computer sets all day long. Of course I'm human, but you can't fool the machines.
My favorite wasted effort box is the one that says, click here if you want me to trust this monitor, in perpetuity,
exactly,
which means for 32 seconds, because then it's gone. And then it's like, oh, start over again, So
let's just bring back Clippy and everything will be fine, right?
Oh, good grief. Yeah, there's a blast from the past, right?
I've been trying Copilot, and and Microsoft is creeping towards something that has some utility. But, the issue is, it's really funny because I don't know, Mike, if there's a sliding dial in most of the GPT, systems now that says be more aggressive or be less aggressive. And I think, frankly, Chippy, all of these things were examples of some engineer deciding just how invasive to be instead of giving us a level of control, because each of us wants to sort of customize our interaction with these tools.
And that raises a really interesting point, because if you look at how, for example, Jobs came on the scene, he didn't start with the tools or even the engineers. He just said, make it useful, make it intuitive. And I think there's a good case to be made that many of today's tech companies have failed in that regard. So the next big jump I'm looking for is going to be, how do we make these tools intuitive? I think the first companies that really get to the point where we have seamless technology, a la Star Trek, for example, where it really is an interactive consumer or user-driven experience, are going to make bank. I think we're maybe, Howard, you've got better feel for this than I do, but I think we're maybe 5-10 years away from that max.
Well, it's funny because, in the last couple of talks I've done for the Money Show, I've said, take a step back from a particular industry or a particular kind of technology and ask yourself, basically 4 or 5 questions. Is it going to save me time? Is it going to save me money? Is it going to make me more productive? Is it going to help me make better decisions? Is it going to impact my health or my social status? And honestly, that's the test I think that you need to start with these days.
Yep.
Because we're also facing a consumer population. There was a great article today that said it's just starting to dawn on us, and this is no knock on Mike, who's a youngster, but it's starting.
I don't know if I go so far as to say youngster, but
it's starting to dawn on us that the gap between commentators has not, moved down 1 decade. It hasn't gone from Dan Rather to one of the, I don't know, Nora, whatever her name is, on CBS. It's gone down 40 years. So the people who are now interacting with that generation aren't experienced leaders. They're not people who've earned their spokes and their spurs for 20 years. They're kids. They're peers. And so the whole influencer culture and the whole TikTok world has changed. It's frightening. You see some of these kids talking and you realize that they're from another planet.
It's interesting to me from an investing standpoint, because we see that particularly when it comes to our technology investments, when we're looking at companies, the way companies are interpreted is uniquely a function of the lens that the interpreter is using. And when we start talking about historical events that have shaped, where companies are now and legacies of why they're dealing with things, that's information that in many cases has been nothing more than a history book entry to the young folks in our office who may or may not have paid attention. And when they start pulling that onion apart and they start delayering that and they start realizing why Apple is what it is today, or why Microsoft is what it is today, or why Tesla is what it is today, they're shocked, because history in their mind is nothing more than something on a page, whereas older investors, older technologists, older people who are looking to move the markets have lived that information. So I think it presents a unique set of opportunities. And from a trading perspective or an investing standpoint, again, we see lots of folks here who are video game generation who want nothing more. Okay, green light buy, red light sell. You can't do that anymore. You can't do a particular technology.
I think you're lucky. You must be putting Xanax or something in the water at your place, because to have your analysts be patient enough to look backwards at any of this history is shocking to me, because I think they have no rear view mirror at all. I mean, I
Well,
think,
we don't let them escape that, because the investment philosophy that we bring to markets, is very much one that history may not repeat, but it rhymes. So whether they like it or not, my young analysts, they have got to read this stuff. If I'm honed in on some event somewhere, they better figure it out, because they know I'm going to ask a question across the conference table, and if they don't have an answer for it, I'm going to force them to go get one. So
yeah.
it's a unique point in history, Mike. We're at a Q1 where there's this day of reckoning, according to many of the naysayers. But as Howard and I will tell you, this isn't our first rodeo. Technology has never, ever in the history of the world stopped or failed to make innovation happen. So I think it's an exciting time to be an investor.
I think it is as well. And I also think that we're going into a period where, we're going to have to deal with this issue of, our 4 or 5 platforms going to control the entire space. And right now, I just wrote a column about AI. It's the same issue. It's how many of these companies can take $10 billion from their P&L and make it invested in compute. And the answer is maybe 4 or 5. I mean, these little guys that are dancing around, they're all going to be exactly like what happened in the game business. They're going to live on top of the game machines. So, when I started as a game developer, we thought we would build a game machine, and everybody was like, well, have you not heard of the PlayStation, the Xbox, and Nintendo? And then it was over. It was over. Now you were simply a contributor above their layer. And I think in AI, because of the war chests of these big guys, they're going to control the platforms for the foreseeable future.
It's fascinating. It's fascinating, again, taking that sort of trip down the historical memory, technological memory lane. I wanted to ask, obviously, Keith, in your case, what you're seeing in the public markets, and Howard, in your case, in the private markets. You wrote something in Inc. recently, said it's the harsh realities of the post-pandemic digital economy sink in. And then it went on to talk about some of the pressures that were impacting some of these companies, and how people have to approach their business as founders, and on the other side as investors, slightly differently in the private markets. Could you care to elaborate on that a little bit?
Me or Howard?
Well,
I'll start with Howard, and then we'll go to you, Keith.
I mean,
Okay.
to me, the biggest thing that I'm engaged in right now with about 25 of our portfolio companies is there's not a single one that is looking to increase their bricks and mortar presence. Not a single one. Every one of these guys is shrinking, and they're shrinking in 2 ways. One, they're shrinking physically. They just, banks, nobody needs to show you a physical infrastructure in order to convince you that they're real. And that's a mind shift. When we grew up, the banks had these monumental facilities. Today they're an ATM, and or they're a phone. So number one is the shrinkage in terms of physical. But the second thing is, we're going to have a 4-day work week pretty soon, and half our workforce or more is going to be remote. And then add on top of that the gig economy, that probably a third to a half of the entire workforce in 5 years is going to be independent contractors. Boy, everything that we think of as the company is going to change radically, and that to me has huge implications.
Okay. And then Keith, to shift to the public markets, again, you sort of look at how we came into this year and where we are now, a little bit of a shakeout. I mean, what are your thoughts on how investors should approach that, right? Whether they're already heavily invested in tech or are looking at this as maybe an opportunity to get more involved?
Well, I think, to the point that Howard and I have just sort of by discussion demonstrated, is that history constantly moves forward, innovation constantly happens. And so the question is how you really approach it, right? Anybody who thinks technology is going back in the bottle shouldn't be in the financial markets. That genie is never going away. We are creating more information faster and layering it upon our lives in ways that we couldn't have imagined 10, 15, 20 years ago. So investing now is not a question of do I or don't I, like so many people think. The question is, how do I get a hold of it? How do I get in front of what happens next? Which companies are going to get me there? And to our point earlier on, it's a very short list. You can mess around with all the small stuff if you want, but that's going to be in the private markets. That's going to be a function of people like Howard who have the expertise to help these folks move forward. By the time it hits the public market, you want to be big, strong balance sheets, massively successful management, the ability to protect margins, making products and services that the world can't live without, because it's all about the layering. So I don't pay attention to this short-term noise. This is just nonsense to me. Quarterly earnings in digital companies do not match up. What you've got to do is go long cycle.
And by the way, I mean, our companies, what we're telling them in addition to shrinking is build to be bought.
There you go.
Simple. We're saying 1 in a trillion of you is going to be the next big win, but 50 of you out of 100, if you're prudent with managing your investors' money, can give them a colossally attractive return in the next 3 to 5 years.
Absolutely.
What scares me is, unfortunately, that 3 to 5 year window, which is a venture window, is not the kind of window for investment that we need for environment, for climate, for medicine. And so, we're going to need family offices, and we're going to need other sources of capital to support a 10-year window if you want to change some of these areas, because the VC community doesn't even get it. I mean, they're not even focused on this kind of stuff. So
no, they're so dog and pony show driven, lottery ticket mentality. It's interesting because that comment of yours raises a memory in my memory banks, all 3 of them that I have left. Back in the early days, in the 80s, we were very actively involved in a lot of different things. We learned some really interesting lessons from the junk bond experience at that point in time. Michael Milliken and Ivan Boesky, names that went down in infamy, but, didn't deter from their brilliance. He told me years and years ago, you got to buy 100, 50, 100 of these things, knowing that 99% of them are going to go feed up.
It's optionality.
Big time. But the one that hits is going to hit so big, you won't even believe it. And investing in tech right now is a lot like that. If you're dealing with these small companies that are coming forward, you're going to position to be bought. You're going to do something great. To Peter Thiel's words, you got to be 0 to 1. You can't be N+1.
Yeah. Well, the other thing I would say is and I'll say this in the talk coming up. I mean, I'm not sure that with yield at 5+%, or on 100% safety, that an investor of the typical money show investor oughtn't to be saying, I'm going to take X% and I'm going to protect it because that kind of yield is reasonably safe and it's attractive. And then, I may roll, 1/10 of my portfolio into something like Bitcoin, because the last money show we had in Vegas, I thought the guy was tremendously compelling about Bitcoin and, purely Bitcoin, not crypto generally and whatever. But and the halving has occurred, and we didn't see the bump. I mean, the bump was, historically there's been a bump. We'll see going forward whether crypto changes or not. But I think that the real scary thing is we're going to have such a, you'll pardon my French, such a storm of grief in the next 6 months before this election, that I just think that the people are going to turn off, and I suspect that we're going to even see that in the market, that people are just too much noise, too much drama, too much confusion. So I think that we're going to see a fair amount of investors just park. And if you're going to park in tech, you better park in these big guys, because they may move in a small range, but you could have a company go to 0 if it's one of these littler guys.
That's a really interesting thing. I mean, my take on this is chaos produces opportunity. So, as personally upsetting as I find our politics at the moment, I do money. And my job is to help our investors, our clients around the world figure that out. So, chaos to us is opportunity, and you got to pick it right. You got to pick it safely. You got to pick it with confidence. But, you always play offense, and parking it is an offensive decision, because if you decide how you're going to park it, why you're going to park it, and the conditions at which you come back out of the garage or out of the bank, then you know what? You've won. So to me, that's an advantage.
Well, I talked to a bunch of the investors at the last conference, and they were surprisingly defensive in the sense of, I'm going to be sure I hang on to mine in these bumpy waters. But again, when Amazon moved up to the big, to become a part of the S&P, it strikes me that it diminished the range of viability. In other words, swings were going to be, which makes it even safer. I mean, it just makes it a
Well, it
fairly,
also attracted a lot of institutional portfolios because
who
when
can
you
now
get
buy it.
something like
Exactly.
that, you know, what we know from our side is that we know that once the institutions get involved, many of those shares are never going to see the light of day again. They have to be
Absolutely.
there because of allocations, because of defined benefit plans, endowments, pension funds, whatever. They have to have names in the portfolio and on the list.
Right. Exactly. Exactly. I agree with
I'll
that.
tell you, sometimes it's so easy hosting one of these things. You just let the smart people talk and stay out of the way. So this has been fascinating. I do want to say the time that we have left. Obviously, we're speaking because you're both going to be joining us for the Investment Master Symposium, Silicon Valley. It's May 7th to 9th. Beyond what you've already shared, any kind of sneak peek or nuggets of wisdom you want to tell people that they're going to hear more about when you join us in May?
Listen
I,
to Howard.
all I would say is that we're 5 years from AI making a serious impact in the business operations of 90% of the businesses out there, notwithstanding what the business management thinks. It's just not coming that soon. And it's going to take, now machine learning is a completely different thing. I mean, we're behind the curve on machine learning. Everybody with this amount of data flow going on should be experts at customer management, customer, all this kind of stuff. But pure AI is down the road. And when you see a company shoveling a bunch of money, it's cosmetic. And that to me is bad management.
Anything else you'd add to
Interesting.
that, Keith?
Interesting. Well, Howard and I are going to have a good discussion on stage because I think it's sooner than 5 years, but I do go down into the machine stack because the amount of data is an opportunity. The question is, what do you do with it and how do you do it and when do you get here? But if we know anything from investing, get your money there first, get with the right companies and hold on for dear life because like a rodeo, you want to make it all the way to the buzzer.
Well, great. I think that's a great place to wrap things up. Howard, Keith, thank you so much for joining. Again, if you're listening or you're just tuning in, both these gentlemen are going to be speaking at the Investment Master Symposium, Silicon Valley. We're in Burlingame from May 7th to 9th. Definitely check out the details and the link to register below and see what they have to say. Because again, I wish we could talk for an hour, but we'll have to wrap things up. Thanks again for your time, gentlemen.
Thank
Thank you very much.